Hi everyone, welcome to today's webinar hosted by Onfido and Liminal, where we'll be talking through innovations in account opening for trends shaping AML and fraud. With over half of all users preferring to open accounts online today, onboarding is a key battleground for growth in financial services. Throughout the webinar, we'll be hearing from market experts on the burning questions surrounding account opening, drawing from Liminal's latest link index and our expert insights. So we'll discuss the account opening technology landscape and the forces shaping it, Liminal's findings from analyzing 32 leading vendors in the account opening space, Onfido's insights from working with over 1,000 disruptive businesses globally, looking into stuff like what the future holds for onboarding and whether the next major transformation will take place at account opening. If our listeners have any questions as we run through today's discussion, please do pop them in the chat. So, with me today are two identity experts. We're joined by Cameron D'Ambrosi, Senior Principal at Liminal, the world's leading identity consultancy. We're also joined by Minh Nguyen, VP of Product at Onfido, making digital identity simple for users worldwide with end-to-end identity verification. I'm Alan McAlpine, Director of Product Marketing at Onfido, and I'll be your host for today's session. Now, before I want to get into the discussion, I want to hand over the floor to Cameron to talk about the link index, setting the scene of account opening. So Cameron, can you talk a little bit more about the index? What's the approach you took throughout? And what are some of the key takeaways for you?
Great question. Well, first of all, thank you for having me. Really excited for today's session and excited to answer some of these questions as well. So please do drop those in the chat. So at Liminal, we are focused exclusively on digital identity. And with our link index reports, we really tried to drive at this critical intersectionality of use case and industry vertical. So with this report, we focus specifically on account opening for financial services because obviously your account opening needs are going to vary rather significantly whether you are operating in a regulated industry like financial services or maybe doing account opening for e-commerce or online dating or social media or other use cases. So based on those unique needs of buyers for this specific use case, we evaluated 32 leading vendors offering account opening for financial services and surveyed over 50 buyers to really understand what buyers want, what are those key purchase criteria, how are they leveraging these solutions, and what solutions are meeting that demand most effectively. So really excited to dive into those findings with you all here today and share what we found.
Amazing. Thanks, Cameron. And so turning our attention to the first market demand for today's discussion, the cost of KYC non-compliance is higher than it's ever been. Not only are regulators still building more constraints into customer identification processes, we're also putting more pressure on businesses where it hurts, their wallets. So AML fines increased a whopping 50% in 2022, with over $5 billion issued in fines globally. This is causing financial services to sit up and take notice, perhaps more than they've done so in recent years. And it's reflected in buyer considerations right now. So KYC is still the primary purchasing driver for account opening, with over 92% of respondents citing it as a must-have. While we could certainly talk about the 8% of services who don't ask for this, the bigger question might be, why is it that KYC is the main reason customers are purchasing account opening solutions? Minh, we'll start off with you on that one.
Yeah, so first, thanks a lot. And it's great to reconnect, Cameron, and dissect some of the findings that you have at Liminal and compare notes with what we see at Onfido and discussing with some of our customers. I think to answer this first question, I mean, the first part of it is really, really quite simple. I mean, the main reason there is if a business is not compliant in financial services, they really can't operate. And we've seen recently some of the high-profile banks being fined by the Financial Conduct Authority for repeated AML failures. And so really, while the cost of fraud is something that a business could absorb and ingest into the way they do business, the cost of non-compliance in terms of fines, but also in terms of reputational risk is really something that they can't afford. So that's really the primary driver and the very heart of the conversation that we have with our customers. The complexity then comes in the sense that this is also a moving target. And so we've seen that over the years, a couple of things kept evolving. Consumer appetite kept changing. So we saw challenger banks and new digital experiences completely change the landscape in terms of what financial services and businesses ask in terms of account opening and the experience they want to provide their end users. We also see the regulatory landscape evolve. So country by country or by region or for specific verticals, we see new regulations coming in, new standards emerging, and that makes this really much of a moving target. And then finally, the macroeconomics. So businesses have different appetite for risk depending on the countries or depending on their financial situation. And so we've seen that over the last couple of years, different risk appetites emerge depending on which business, where the business is and where they operate. So in summary, if the business is not compliant, they can't really operate, and that's the very heart of the answer. But also it's a moving target, and there's a lot of complexity there, which I hope we'll have the opportunity to unpack.
Yeah, I couldn't agree more. I mean, it's a bit of a truism, if you will, but obviously KYC, those regulatory considerations are the primary driver for buyers in this space because of all those reasons you just listed, namely, you will either be put out of business or face significant regulatory sanctions if you ignore your account opening KYC obligations, whether you're a fintech, whether you are a traditional bank. I think what we saw in the index report is that other factors, which we're going to dive into, like low friction user experience, like fraud capabilities, are growing in importance as purchasers expand their expectations for what account opening vendors can offer. But if you cannot provide that base level of KYC compliance, the rest of those capabilities are kind of all for naught, if you will, again, because of the critical importance of maintaining that regulatory compliance to these buyers. I think that's obviously reflected by that overwhelming 92% of respondents citing this as a must-have feature.
Yeah, that makes total sense. And so we're seeing here is the cost of not doing this is simply too high. And for the remaining 8% of people, perhaps it's not their primary driver, but it's certainly on the list, is what I'm hearing.
Exactly.
And so, looking into kind of the other side of that one, it's not just about compliance, catching the headlines. Increasingly, we're seeing fraud capabilities as a necessity for financial services. While fraud losses have historically been, for better or worse, perhaps seen as a rounding error for financial services providers, that tide seems to be turning. So by late 2023, where we are right now, it's predicted that $2.2 billion will be lost to account opening fraud attributable to rising attack vectors such as a synthetic identity. So with that in mind, it's no surprise that Liminal found that 87% of buyers wanted more fraud capabilities from their solutions, rather than perhaps less. And so, Cameron, back to starting with you, why are buyers looking for fraud capabilities to help them reduce the risk of fraud? What's driving this?
Great question. So, I think it's helpful to lay down some context as to historically how financial services institutions have approached these problems. And typically those have been with parallel work streams, parallel systems. And that's driven, by the unique differences between detecting fraud and detecting money laundering activity. Primarily, I think the time factor is the most important differentiator. When it comes to anti-money laundering, these checks, looking at transactions, looking at account opening, is typically what you would call kind of rearward looking. The transactions occur, and then they are often evaluated from a regulatory compliance lens. Global regulators not only don't want you to interdict some of these offenses in real time, oftentimes they specifically tell you, we do not want you to prevent these transactions. We want you to kind of observe and report, right? Let it happen, but then tell us about it, why it's suspicious, so that they can conduct further investigations, continue gathering evidence, build a case. From a fraud perspective, that dynamic is kind of stood on its head, right? If you are a bank and you have a transaction that you think is potentially fraudulent, an account that's potentially fraudulent, your fraud team's mandate is typically to cut that out immediately. The second you think there's suspicion, you want to stop that transaction, freeze that account to minimize the possibility of dollar losses leaving the institution. So you have this notion of preemption that's really critical. So from that perspective, that's why you typically saw differentiation between systems and teams, because those mandates are not diametrically opposed with one another, but kind of fundamentally different in approach. However, when you distill each of those problems down to their core essence, I think there's a very strong argument to be made that they are subsets of that same question, which is, who are you and what is the transaction that you're doing? And does that transaction make sense relative to your risk profile and to what we have gleaned about you from the expected behavior of your account? And so this notion of FRAML, or fraud plus AML, kind of was in vogue, call it 10, 15 years ago when I first came into the industry. It died down a little bit as I think banks struggled to kind of integrate these parallel teams. Based on our data, we are seeing FRAML, this notion of taking a combined, more holistic approach to what we'll call these broader digital identity considerations, right? Same problem statement. Is Alan Alan? And what is he doing? And does that match up with what we'd expect Alan to do, whether from a money laundering or a fraud perspective? The new technologies, the enhancements in technologies like AI ML, I think have made it that much more feasible and that much more efficient to perhaps consider fraud and AML considerations with the same technology platform, with those same teams. And I think we're seeing that reflected in buyer sentiment because despite the fact that these have historically been thought of as separate challenges, increasingly the synergies from tackling these questions in an integrated fashion make more and more sense, both from an effectiveness perspective, but also critically from a cost perspective. If you can combine these teams, there's some real cost savings to potentially be had in terms of your overall spend on both your fraud and compliance programs.
Yeah, absolutely. And I think, Cameron, you covered a lot here and all of the key concepts are there. And what really, really resonates is this idea of this synergy or this convergence of those topics and customers having more and more of a holistic view across compliance, fraud, user experience. And so where it's most obvious or most visible in practice is while our conversations with customers start with KYC and start with compliance in financial services, right after that, the day after, as they implement the solution and go live, very quickly we start talking about how we mitigate fraud and how we ensure great user experience, and then balance those three elements and find the best ratio or the best solution to try and optimize the account opening experience. And so very quickly on, we start talking about how we potentially layer multiple signals or methods of fraud detection, how we might combine methods that are active and at high assurance level and more passive and slightly weaker signals, but that might inform about potential risk or potential fraud attacks. And so that's really the first observation or the first trend that we see is we have an industry that is maturing, and we see our customers becoming more and more savvy and looking at account opening in more and more of a holistic way. The second thing that we see, and this is very clear in our annual fraud report, is that fraudsters are becoming smarter and smarter, but also what is available in terms of technology is becoming more and more sophisticated and accessible. So I'm sure we've all seen the rise of deepfakes and generative AI and how available these things are. In the hands of fraudsters, those are really great tools to try and attack systems, whether it's new presentation attacks or injection attacks. And so we see those two things coming hand in hand, where our customers are becoming more and more sophisticated, but also the types of fraud is evolving and becoming more and more accessible. And so that's where, from a technology standpoint, we look at building a platform that helps you or helps customers navigate the complexity of compliance, mitigate fraud, offer the best end user experience, but also integrate all of the new anti-fraud techniques and machine learning systems to prevent the newer attack vectors that we see emerging.
For sure. And I think we see, kind of as a summary there, two things really popping up. Buyers are smarter and more integrated. And so the notion of compliance being one thing and fraud being another thing, while still distinct, they are increasingly seen as more of a package together. And the second side of that one is that buyers want more because fraud is a moving target. You're always going to want more because there'll always be more to want. And that's something we have to kind of be aware of, certainly when you're a buyer in this space. You don't want someone who's standing still. So if we move along, I'm going to take a brief interlude to hear more from the Liminal link index as they set up to the next set of questions. So Cameron, the Liminal link index outlines 3 core purchasing factors. Could you give us perhaps a quick overview of what they are and why they're key in your view?
Sure. So the 3 key purchasing factors that kind of popped on our survey were, number 1, value or return on investment. Number 2, precision, reliability, and time. And number 3, product capabilities. I think each of these drive at really the essence of a compliance program and an onboarding program, which is, more than anything else, you want to make sure that this is effectively bringing customers into your platform without sacrificing, again, on that key notion of regulatory compliance, right? We saw that 92% of buyers rated those compliance factors as must-have. You can see that kind of underpinning each one of these key purchase factors. Again, number 1, value, return on investment. Can I effectively bring people onto my platform in a way that doesn't blow my budget out while still making sure that we respect those regulatory requirements? Number 2, precision, reliability, really drives at that same thing. I think you could see that as very closely tied to return on investment, right? In the sense that if you have a solution that its dollar value to purchase and implement is low, but it is turning away too many good customers, well, that precision is going to be low enough that you're really going to kind of dynamite your value proposition. Your ROI is going to be low, even though, you know, the top line cost is cheap. The opportunity cost of those accounts that, because of a lack of precision, got turned away is not going to deliver that return on investment that you want to see out of a solution. And number 3, product capabilities. We're going to go into this more, but I think this key purchasing factor really represents that increasing buyer trend we're seeing of a shift towards a platform approach, the necessity of bringing together multiple capabilities across the digital identity lifecycle from a single vendor, or a vendor that's capable of orchestrating multiple vendors together into a single point of consumption. The ability to have that breadth and depth of product capabilities is increasingly important to buyers. And I think, again, that speaks to the value and ROI proposition more than anything else, because as we know, engineering resources at a premium, budgets always tight, especially in, you know, what are historically seen as cost centers like your risk and compliance team. The fact that you can consume multiple solutions, multiple sets of capabilities from a single vendor really, again, reinforces the value proposition, because you can have a single integration, you know, a single kind of billing interface, which from a logistical perspective, from an engineering and integration and ongoing support perspective, really drives cost effectiveness, which again, it heightens the value proposition of those solutions. So 3 key purchasing factors, but I think in many ways they're kind of oriented around that same North Star of, we are looking to meet our regulatory requirements as effectively as possible, And what we mean by effectiveness is a combination of that precision, reliability, able to drive results without sacrificing my regulatory compliance needs.
There's a lot there to unpack, but I'm hoping the listeners were making notes as we were going through that one. There won't be a quiz at the end, but it's always great to know. So as we look at this, I'll give Cameron a break for a second here in terms of speaking. So we've just heard from Cameron about 3 core purchasing factors. On the flip side to this, Liminal's research states that more than half of enterprises use more than 3 vendors as part of a waterfall. So looking for solutions in many places. What's driving this, and how can buyers best navigate the mishmash of vendors against their core needs? Minh, we'll start with you on this one. Back to you.
Yeah, I think that really resonates again with what we observe in the market. And so when we said day 1, we're looking at KYC and compliance. Day 2, we are looking at mitigating fraud while ensuring good end user experience. Our conversation on day 3 with a lot of our customers is as they scale their business, they want to be able to operate in different geographies. As they launch new products, they want to be able to support account opening for different type of users and different type of products with potentially different risk profile. And so what is really striking here is as they do this, they end up with a patchwork of vendors if they do that organically, because a vendor might solve a particular problem in one geography where they comply with regulation in a given country. And then suddenly they want to go to another country and then they will have to add another vendor. And therefore, we start finding this patchwork of vendors. And so what we recommend and what we see is how can you from day 1 look at which partner or which vendor is best place to meet your requirements across different geographies, across different user experiences, and across different product lines that you have today or you might want to launch on your roadmap. And so that's really what we see. How can you be a global and a local identity verification platform? How can you be configurable and flexible for different type of end user experience? And then how can you future-proof as well your experience as different technology solutions emerge? So EIDs, for example, we see in Europe that multiple schemes are emerging and are gaining adoption. How can you make sure that you pick the right platform that will support those EIDs, and as adoption picks up in those countries, offer those as a way to onboard securely, but also with minimal friction, new users onto your products? So that's really what we see, and I think that's what explains why we see companies ending up with more than 3 vendors as part of a waterfall, but also some of the things to consider if you want to simplify and better manage your experience.
Yeah, I couldn't agree more. I think, to your point, the increasing complexity and increasing global reach of platforms has really often driven the necessity to integrate multiple vendors to bring those capabilities, to market in parallel, so to speak. But to your point, increasingly, if buyers can consume those through a single point solution, I think that will become increasingly attractive again as often, right, macroeconomic conditions put budgetary pressures onto compliance teams. Again, as a cost center, any opportunity you have to kind of squeeze efficiencies out, we will see. I think the other factor to note around the waterfall approach is, to some degree, there is a sunk cost when it comes to integrating a vendor. And increasingly what we will see is, if you are a bank, if you're a fintech, and you've been with vendor A, and they're maybe not meeting your needs in certain markets, rather than, the proverbial rip and replace, where you bring in vendor B to replace vendor A, you've already done the lift, right? You already have this sunk cost you've paid to integrate this platform. Folks will build out that waterfall and then add in, vendor B, vendor C, maybe even vendors D, E, and F. And rather than kicking somebody out completely, you just get subjugated to a lower rung in the waterfall. and keep that vendor still in play potentially, whether that's for the occasional edge case where someone fails with other vendors and you want to really see if you can kick save them by going to a backup vendor, or for redundancy purposes, right? Everybody strives to hit that critical 5 nines uptime, meet their SLA requirements. Well, we all know things happen. AWS instances go down in pursuit of redundancy and the ability to never, have a customer fail to be able to open an account because of an outage. Having that waterfall means you're going to have built-in backup. So even if it's a vendor that has fallen out of favor with you because you found a better solution, you've already paid to integrate it. We'll keep it in the waterfall, subjugate them, to a lower part of the stack. But if and when we need to call on them in, quote unquote emergency, the waterfall makes it very easy to do that and build that redundancy in.
For sure. And I think kind of just summarizing what I'm hearing here, again, it's a case of most enterprises use multiple vendors because they need to. Either they want to make sure that they're not caught short if someone goes down, or likewise with emerging use cases, the vendor they have just simply doesn't cover the complete suite of needs they have. And obviously those needs evolve over time. So many reasons why, but certainly good reason to have multiple vendors as part of that waterfall. And so one thing the liminal link index and our own observations on Onfido have made very clear is that the technologies available to financial services at account opening are changing at a blistering pace. What are some of those emerging technologies, both within account opening and more generally in the market, that buyers should be aware of? And how can today's buyers manage account opening solutions today while preparing for the future? What should they be looking out for? And let's start off again here with Minh.
Yeah, that's a great question. And I think the first part is picking a partner that is really technology driven. So we've seen how the pace of change around deepfakes and generative AI, and you want to work with an organization that has technology built in at the very, very core of what they do. And so people that keep innovating and make sure that they have the latest fraud detection capabilities, that they follow the latest trends, and that they are at the leading edge of identity verification. The second part of the answer is there's a whole new space to watch around digital identity. And in the upcoming years, that will really reshape the experience around account opening, both from a security point of view, from an end user experience point of view, but also from a regulatory and compliance point of view. And so I would look for platforms that have invested in future-proofing their technology by supporting digital-first means of identity verification. When I say digital-first, I think for years we focused on how we allow users or allow people to access services using physical credentials and moving that into a digital world. And what we see now is a lot of credentials, or a way to prove your identity and other attributes, are digital first. And that's a radically different experience and paradigm shift. So my answer to this is look at the type of partner that you have and how much technology and innovation is at the core of their offering. And then look into the digital identity space. Imagine the future of your product experience and partner with people that have invested and prepared for that future.
So, from our perspective, I think AI certainly top of mind, generative AI in particular. While I think the applications on the defensive side have remained relatively limited, we're seeing tremendous impact on the fraud front in terms of the capabilities that fraudsters are bringing to bear from LLMs, basically making fraud that much easier to achieve. As I like to say, kind of not necessarily creating net new fraud vectors, but really upping the velocity and scalability of the types of fraud that people can commit. Obviously, even if English is not your first language, even if you lack coding skills, even if you lack the ability to write scripts for automating, phishing attacks, you can have ChatGPT do all of that for you. It takes some sophistication in the sense that if you try and use the OpenAI version, I asked it the other day, hey, write me a phishing email that looks like it came from JP Morgan Chase. And I got, the HAL response of, I'm sorry, Dave, I can't do that because there's guide rails in place. But it is very easy to download one of these models yourself to your own computer, and you would be off to the races. So I think we're seeing tremendous technological impact from generative AI, particularly kind of on that offensive front. The other, I would say, parallel technology stream we are seeing is the use of so-called deepfake technology, particularly for identity spoofing. So putting a ton of pressure on what we would call the liveness detection portion of the identity proofing of the onboarding process. Really making platforms take a hard look at their level of investment in their liveness detection and require stronger solutions because, again, access to technology, the cost of making a deep fake has gone down significantly and will only continue to go down as those deepfake tools get more effective. And as we know, cloud computing cycles, even if you don't have the necessary, GPU horsepower to do this yourself, it is very easy, very cost effective to spin up an AWS account and use scalable cloud computing as your backend for these use cases. So tremendous impact there. And I think, again, we're only going to see the quality of those threats increase, the velocity, the scalability of those threats increase, which is going to necessarily require, a response on behalf of the banks as they come under increased pressure. And then the third AI trend we'll call out is, the ability of artificial intelligence to supplement, if not outright replace, traditional rules-based approaches, whether that's in the money laundering sense, the regulatory compliance onboarding sense, traditional risk scoring rules-based models, increasingly being supplemented with AI. I think one of the key considerations here is what is the regulatory appetite for the deployment of these technologies. Regulators increasingly are concerned with, elements of fairness. If we have, what's often called a black box AI model where there is no explainability of the model's outputs when it is doing something like generating a risk score, whether that's for a user or for a transaction, regulators want to make sure we have some visibility into that box. Can we understand a little bit better why a certain person or why a certain transaction had a heightened risk attached to it? And so, I think from a technology perspective, for these regulated use cases, if you can be deploying and developing AI models that have, what we'd call white box or, human readable explainability, that's going to be a key feature moving forward to make sure that regulators will be on board with your deployment because of those concerns around elements like equity in particular.
For sure. And that's the thing we talk a lot about on Onfido as well. And on your second point, Cameron, I think, Minh, you also touched on this. In the old days, prior to perhaps 2022, you could have bought a fake passport on the dark web for maybe $30. And in many ways, the rise of generative AI has really democratized access to fraud. And that $30 is probably now 30 cents and can scale infinitely more times. And so we're seeing that as well with our customers. And we talk a little bit about this, as Minh already mentioned, in our identity fraud report for 2024. So do check that out if you can. And so moving along to the final question. We've had kind of the best part of half an hour talking through all things account opening. And no doubt listeners have been scribbling notes along the way. So let's finish with a flourish before we head to the Q&A. So what one piece of advice-ish would you give to buyers looking for identity verification solutions, account opening and beyond? Cameron, over to you in the liminal corner.
So, I think really thinking about what your particular needs are, what is the maturity of your organization, and what vendor is going to be able to meet your needs not just now, but in that near to intermediate term is really critical. And I think that speaks to, again, what we have seen from buyers around, return on investment, elements like scalability, like accuracy, like product capabilities, making sure that you are thinking about where your needs are going to be and how that platform is going to be able to grow and evolve with those needs, I think is going to be really critical to delivering that return on investment. Because again, any value proposition that you accumulate can pretty rapidly evaporate if you're forced to go out and integrate an entirely new vendor and incur all of those costs that are associated with those types of onboardings. So understanding your team's needs, thinking about, are we interested in pursuing a FRAML strategy? If so, is this a vendor that can support us on that trajectory as we continue to grow in blending these teams? I think these are the kinds of questions that buyers should be asking themselves to make sure, they're not constraining themselves too aggressively, boxing themselves in with the decision they make now. That's really going to come back to bite them, 1 year, 2 years down the line.
Sure. And in the Onfido corner, Minh, what advice would you give?
I think the main one is think about the end user experience. And keep in mind that your customers are not comparing you with other banking apps, as you might be benchmarking against your competitors. They're really comparing you with the best applications. And I think with technology, history really only goes one way. And so the consumer expectations and appetite for amazing end user experience has really increased in the last couple of years. So think about the end user experience. How can you be on par with the best apps that your users are using? I would add to that, think holistically at onboarding, but also beyond in the life cycle. And how can you bring the best user experience throughout the life cycle and combine compliance, user experience, and fraud detection? And then the last piece of advice I would give is really think long-term. Spend time, do your research, and Liminal is a great source for that research. Spend time and select a true partner, a true technology partner that you can build for a solution today, but also future-proof your account opening experience as technology evolves, as regulation evolves, and as consumer expectations increase.
Amazing. Well, right, everyone, I hope you are taking notes. So to move over now to the Q&A. So it's over to the audience. So we've already got some questions coming in, which I'll run through. Cameron, Minh, I'll leave you to put your hands up if you want to jump in on a specific question first. But let's see what we have in the chat to kick us off. So going through, I think this is in relation to the topic around vendor management. Today's buyers how to choose between local regulatory fit in favor of global coverage or vice versa. I think, Minh, you might have some pretty good views on that one.
Yeah, I actually think while the industry was quite fragmented up until quite recently, where there were some highly specialized vendors with local compliance, two things have happened since. One, the industry has matured and there's more and more standards that are bringing clarity to what is needed at the regional level and at the country level. The second thing that happens is the rise of platforms that are highly integrated and allow you to have global coverage while ensuring that you have local regulatory fit. And that's something that we have built into our real identity platform at Onfido in meeting local regulatory needs and offering global coverage. So I really think that the answer now is very different to what it was a couple of years ago. And I don't think now that customers really have to choose.
I couldn't agree more. I think full cosign on all of that. I think with the right vendor, you do not have to make that trade-off of global coverage versus regional or local expertise.
Amazing. So that's good. I guess the choice is don't make the choice. And just seeing another one coming through. I think this question's for Liminal. So Cameron, fingers on buzzers. The report lists a good number of attributes that identity verification vendors should provide. So there's a lot of stuff in that report. In your opinion, which handful of attributes are most significant from a vendor?
That's a great question. I mean, I think to some degree there is a high degree of individual use case specificity here. So at the risk of, punting on the question completely, I think understanding which vendors have a strong presence in the regions you are looking for and have a track record of success will allow you to kind of stack rank those attributes most importantly for for your use case. Am I understanding the question correctly? I'm answering this from a question of individual attributes, things like name, address, government issued ID, or do you think the question is driving more at kind of product level features of the platform?
Yeah, that's a good point. I think let's assume here for sake of argument a bit of the feature level components. So which product capabilities do you think perhaps are most significant in the search for a good vendor here?
That's a great question. I think as we saw from the survey, regulatory compliance, obviously top of line. And I think in line with what we saw from the technological advancements, we are looking for defenses against fraud with things like customer risk scoring, and then the ability to kind of do those base level things like address verification, date of birth verification, name verification, government issued ID number verification effectively. And then in terms of what I think we see as bubbling up higher in demand is the ability to make these checks more effective, more seamless, more continuous. So this notion of continuous KYC. Can my vendor help me start automating things like my ongoing CDD checks or risk-triggered EDD checks? Can my vendor proactively flag for me when the risk level of a customer has changed without me having to have gone in and run my own enhanced due diligence on a recurring basis? We're increasingly seeing buyers respond to those product level features and demand them further. And then I think we're seeing a strong amount of differentiation again on the document and liveness detection front. So both liveness detection and anti-spoofing for people and faces, as well as liveness and spoofing detection for documents themselves, what's often referred to as document liveness. So is this a real passport that someone is holding up in front of their camera, or is it a picture that they photoshopped from their desktop that's being, injected into the camera feed to make it look like they're holding a real camera? And then last, increasing demand and interest in geolocation and intelligence data. Again, another key signal that can kind of underpin a lot of these risk calculations. Obviously, if you can get accurate geo data, really a critical piece of that risk calculation and really, really helpful for both AML and fraud because you can identify someone as being located in a high-risk jurisdiction, even if they're lying about it. And then increasingly as a risk signal, obviously, very helpful to understand where is this device and how does that look relative to where I would expect the user to be. If you've opened a bank account and you're supposed to be in Newcastle upon Tyne and your geolocation indicates that you're in Ukraine, obviously that's a transaction we probably want to take a closer look at. So geo increasingly important these days.
Yeah, that makes total sense. And I'm just looking at the time. It looks like we're reaching the end of the webinar, and that's all the questions from the audience. So I think I'll wrap us up there. Unless, Minh, you've got anything you want to add to that last point?
No, all good. I think Cameron
All
covered
good.
everything.
No, Cameron, you've nailed it at the end there. So once again, folks, so thank you so much to our expert panelists. Minh, thank you. Cameron, thank you. And thank you to our audience for listening. You can find out more about Onfido at onfido.com. Likewise, you can find out more about Liminal at liminal.co, the latest link index, and to subscribe to Liminal's regular identity insights. With that, I'll draw us to a close. Thank you so much for everyone for joining, and we'll catch you all soon.